Welcome to the fourth update on our Pharma Fund investment recommendations. We had taken a choice of investing into pharma funds as the sectors where pharma sector was doing extremely well in the current upswing that the market is having. We had recommended 3 funds out of the pharma space. Though there are about 7 to 8 pharma funds available in our country, we wanted a longer history for these funds to invest. So these are the 3 funds. SBI, UTI, and Nippon have a long track record. They have been there in the industry for a quite long time. At the time when we recommended 4 weeks back on 1st of June, the NAVs of those funds were like this. SBI was 141.8, UTI was 103, and Nippon was 186. This protection is in case our investment goes against us. Suppose the funds have to underperform or go down, turn down for some reason, where we will exit. For SBI, we had exit at 134.95, UTA was 97.95, and Nippon was 117.1. Where it is now, almost all the funds have started doing well. Most of them we can see they have gone up around 2 to 3%. Among them, SBI leads with 3.63% gains in the last 4 weeks. That is about a month now. In a month, 3% gain on the funds. And current protection, what we had earlier when we invested from there, now we have moved up. Even protection has moved up along with the price movement. So current stop loss for SBI is 140.7. UTI is 101.7 and Nippon is 182.7. Observe here, from where we entered to where we are now, all the funds have almost locked the risk that they carried at the time of investment. If a 10,000 investment has been made into the funds that we recommended, how it would have been? The number of units that would have come based on the NAVs which we purchased are marked here. SBI would have got 70 units, Nippon would have got 53 units, and UTI would have got 97 units. So here, big or small doesn't make sense because we are only putting 10,000 rupees. It is a percentage return that matters in the long run. So based on that, risk per unit on SBI was 6.85, Nippon was 9.11, and UTI was 5.11. By just seeing these numbers, people will get an idea that UTI was the lowest in risk. No, it was not. It is a percentage that we are having here. Obviously, almost all of them had similar kind of risk. SBI had the lowest. You can see the total entry risk. At the time we entered, SBI had 483 rupees risk on 10,000 rupees investment, while UPI had 495 rupees risk on same 10,000 investment. So that was 4 weeks back on 1st of June. Today, on 26th of June, where we are, the current value of the investment that we made, that 10,000 rupees, is SBI has gone to 10,363. Nippon is 10,259, UTI is 10,313. Currently, what is the risk we are carrying? When we entered, we had 483 rupees risk on SBI. Today, as we are 4 weeks down the line, risk is only 77 rupees 57 paisa. From wherever the value of the investment is today, if suppose that is to go down and hit the stop loss today, we will still be losing around 440 rupees from the level where we are. This includes the profit also. On the investment that we have made, what will be the loss if suppose things go haywire in the coming week and markets tank or funds do very badly and we get out on the stop loss hit? On SBI, we will lose 77 rupees. On Nippon, we will lose 183 rupees. UTI, we will lose 132 rupees approximately. So as of these numbers, Nippon is not doing well. Let's see what is happening in the funds stocks, what is the portfolio they're carrying. Who are the leaders? Current week leaders were entirely different from what we had in the last 2-3 weeks. Strides are collab. This company is more on the cancer drug side. Probably something is getting developed in the cancer drug, or probably this company is also working towards a drug on COVID virus. Don't know as of now, because the technicals when we use, technicals always prescribe be early than the news. There can be something getting developed. Syngene and Biocon both are, Syngene is a subsidiary of Biocon. So Biocon is also going up, Syngene is also gone up. These 3 stocks made big rally in the market, while we have to keep in mind last week market was down. Broad market was down. This is the holdings pattern of all the 3 funds. which are the stocks they are holding and what is the performance of those stocks. Lines that are marked in green are stocks that all the three funds are holding. These are mostly large cap businesses where almost all the funds will have exposure, and if you see the exposures also, they are very high, even 10%, 8%, 9% exposure into single stocks. When the broad market went down, of course, it also carries these stocks, big stocks along with it. So that's where we can see most of the stocks in the green band is the negative side this week, while still we had some star performers. That's what we talked about. Syngene's star is Strides Ecolab, Biocon. They have made around 5 to 7% gain in a market which was going down, and in a sector which we have picked it to be the best performing sector. We can see there are some weak stocks and there are also some stars in it. So that's how our portfolio works. In this, we have to take note. We have taken a call to invest in the market which is hit a bottom and started recovering. So whole market has started moving up. In that, we found a segment which is doing extremely well. That was our pharma sector. In that, we went into identifying funds to invest, rather didn't take a choice of buying stocks ourselves, because that expertise does not come with retail investors. So we left the choice to fund managers to select the stocks and form a portfolio. And among them, we also made a decision to invest only in funds that are there for a longer period in the market. So many steps we took to identify the best possible outcomes that we can get. So there is no prediction done in this. We have just taken the probabilities, keeping all strengths in our side. That is the in general gambling, they will say house is always at the advantage. That advantage is if you are having all the probabilities in your favor. That's what we did. We did all the selections to be in our favor, and then leave it to the market to have returns. Those that are marked in red, here are funds, stocks that one or two funds have with them, and probably now we can see the deviation that is coming up. These one or two stocks that funds carry, when they outperform the market, that is where they are able to give better returns. Today, SBI is leading in performance. Why? You can see when their high exposures are losing very less, their lower exposures are more number of stocks are gaining. Strides Ecolab has gained 5.63%. SBI is holding 3.5% of it. Biocon, again 5% gain. SBI is holding 2.8%. If you see 7.6% gain in Syngene, while only Nippon is holding that. Whereas when you come down the line, Nippon's holdings, big exposures are taking a hit. Whereas in SBI, exposures in weaker stocks are slightly lesser than in Nippon. Of course, these all small dynamics, need not be worried. Overall, the sector is going up. In case if you have not invested into SBI, you have invested into Nippon, need not worry. That will be a small percentage difference. Of course, we are in the early stage of the bull market in pharma sector. It might take some time to develop. Don't know. As of now, we have almost come out of the risk that we carried. Chances are it will not be going the same way, because in 1 month we have made 3% returns. For people who are very conservative, investing into FDs or very small deviation in their investment to mutual funds, they will feel happy that they have made 3% gains in 1 year. And for those who have been looking at 30%, 40% return, this will be like pittance. Of course, for people who are looking at 40%, also 3% per month is almost close to reaching 40%. But I would like to give a information here. 30-40% on a regular basis consistently is not possible in the market. If somebody is looking at or having a dream of maintaining 30-40% returns from equity investments, it is a myth. It will not happen. That is where people have their expectations not met, and they are always not satisfied with whatever returns that comes. I don't say that you should have very low expectations. Have expectation that can be met. 30%, 40%, obviously it will not be met on a regular basis. 1 or 2 years, yes, it will come. So from leadership portion, the blue portion here that is marked is all the gaining stocks. Red portion is weak stocks. Whole market went down this week. So obviously we have a negative portion here. In spite of market being negative, there were few stocks which rallied extremely. In that, Syngene, Strides, Biocon, IPCA all made big runs. So now how the money is taken its journey, the route of 10,000 rupees in the last 4 weeks. When we invested 10,000 rupees here, at that time we had a risk of, that is when we get out, we will get back only 9,517 rupees. we had a risk of 483 rupees there. First week after we invested, positions went up. Investment that we put at 10,000 rupees became 10,264. Risk also, which was at 9,517, claimed to around 9,711. This place close to 9,800. After that, for 2 weeks, markets were stagnant. Funds did not do well. So when price dropped, risk remained at the same level. It will not drop. It goes in only one direction, that is upside. After that, it slowly moved up. Today we are at 10,363. The 10,000 which we invested has now become 10,363, and the risk from 9,517 it has gone to 9,922. At present, we are having only 77 rupees risk on the 10,000 that we invested. If suppose something goes extremely wrong in the market, of course, there is no chance that can happen now. Just taking a out of the box thinking that if suppose something goes extremely wrong and the whole market tanks, something very bad happens in the market, we are exiting at 9,922. That means 10,000 which we invested, today if we get out on a catastrophe, we'll still be losing only 78 rupees. So as long as it keeps going up, even the stock also keeps moving up, maybe in about 2 or 3 weeks time, this can go positive. This gray line has a potential to move above the blue line. That means we are starting to lock profits. As we travel more and more into the journey, with the strength that pharma space is building up, a lot of drugs have been discovered. Cipla has already moved their consignment of remdesivir into the market. A Glenmark product is also coming to the market. Glenmark had a very big rally because their drug was cleared for COVID patients to be advised. So these all developments and further development that is expected in the pharma space is going to give a push to the prices. While today somebody was to invest into pharma space, again the same 440 rupees risk is there. We are going to invest here, their risk will be here. So at any time, pharma space is presently carrying around 5% risk. You stay invested, you are slowly moving away from your capital risk and you'll lock profits. So let's see how the journey continues. Thank you.